It is Sunday the 16th of August, now just after 6 p.m. I'm going to have a look at the global indices. I'll start off with Wall Street. So we had a really nice kind of follow through, move to the upside. We bumped heads at local resistance around 28,000, although we've obviously gone to all-time new highs, or at least, I beg your pardon, highs at least since February. So we've kind of gone the highest that we have. That's pretty cool. I'd like to see price pull back into the moving averages or hold, and then before continuing on upwards. The weekly in isolation looks nice and healthy, no issues there, and the monthly looks pretty good. It's broken through 26,700, which should now free it up to head up towards 29,000 and potentially higher. So it should, in theory, be free, or from experience, be free to now take a run up to that. So any pullbacks and continuations might be bullish swing opportunities for me, and there's no signs of divergence here. So everything technically is looking fine. Obviously just noting price action bumping its head right here at 28,000. There's a rejection candle, and then the subsequent candles this week going through on Friday, Thursday, Wednesday, and Tuesday, just not able to get past that. So a nice little pullback could attract some more buyers to then push on and continue on higher. So the Dow at that point looking really nice and healthy, no issues there. We've now, if I move across and have a look at the S&P is bumping its head on a similar fashion on that daily basis, just below all-time highs. Here we go, let's call it 3,400. And again, the weekly in isolation, nice to see it come back and have take a bit of a breather, but it's not ridiculously overextended, and so it's close to those all-time highs. And on the monthly, it actually looks really nice and healthy compared to its behavior previously. It actually looks really good. So in isolation, as I say, technically there are no warning signs here. There's no real bearish divergence, no outstanding bearish divergence. The price action itself, aside from minor struggles just below these key levels, looks in every other respect relatively healthy. So pullbacks, at least here, should represent, or at least for me, may then well be bullish continuations. Then as I move to the NASDAQ, which is generally speaking the most bullish of the bunch, there is a potential double top here. So this is what I'll be doing at least this week, which will impact my overall approach, is keeping an eye on these most recent swing lows should they be broken, and if they do, it'll be relatively quick. So I'm just going to mark that. And then I'd start to look for potential, the indication to me would then potentially be a bit of a weekly pullback coming down. Price overall is still pushing above and trading above and operating above 11,000, but just hasn't really kind of picked up. So it might just be taking a bit of a breather this week, and that's why I'm marking it. This could be a potential lower high, and then I could get a lower low, and it could start to drop. So I am a little bit concerned. Is it overextended on the monthly? Yes. So the NASDAQ, by comparison to the S&P and Dow, is very much overextended, and should be at some point, should be eligible, I would say is already eligible for a nicely monthly pullback. In terms of the weekly, no, it's not so bad. But what I am noting is just a little bit more bearish, these kind of spikes coming in at the top of the candles, which just indicates that the buyers aren't buying right up until the top. If you look at these previous candles here, buying right up to the top, buying into the close, but not happening here. So this 11,000 area is a little bit of a problem area this week. I'd like to see price break and continue on past that, but I'm also going to keep an eye on the lows. So the NASDAQ is really going to be my weather vane to give me clues as to how this week unfolds. Should the market start to drop and break these lows, then my expectation is going to shift from kind of neutral to more bearish, and keep an eye on that and see the outcome. Looking at the Russell 2000, not sort of bumping its head up here again, 1600, coming back into the moving averages again. It is at a level of support and resistance, and could ultimately a week from now close as a swing high, but this one in isolation isn't actually that bearish. I'd like to see if we can get past that, the monthly coming up into a monthly resistance level. So just noting that, just meaning that that one is not necessarily free and clear to continue to the upside. Looking at the UK FTSE, just noting the bearish kind of close on last week's candle, unable to get over this level, which we've been struggling with for a while. Although it is technically in an uptrend, I'll be looking for breaks of this low. We're still within a range, so when we break outside of that range and continue down, that's what I'll be looking for. If I look at the candles in isolation, ignoring the color for the time being, they've produced that swing high, and could imply that there's a longer term kind of more bearish downtrend on the horizon for that. So as soon as we leave the US, it becomes significantly less bullish. Looking at EURUSD, they're definitely having a similar bumping heads against at least a similar monthly level of support and resistance. And again, this week I'll have the same approach as with the FTSE. I'll be looking for breaks of the low or breaks above the high. So breaks above the high are signs of bullishness following through from non-US indices, and breaks below the low could be an indication that the markets have kind of reached their recent kind of rally and subsequently deciding what they want to do. Then looking at the DAX, Germany DAX, this one I feel that it definitely are struggling in this area, and a break of the most recent low here is significant, which is a break of the most recent low here. So there was some nice bullish opportunities recently, but we've produced a lower high on the daily, and so we're not looking as strong now as we were back then. Again, we are in all-time highs, and we've got strong resistance up ahead at these levels here. I need to just color code those as well. So this is an area for me. Again, I'll take the same approach, much more cautious on the non-US stocks, which are looking potentially weaker. For example, here at the Hang Seng, no clear trend. Okay, so it's gone from a downtrend. It's tried to break up. It's broken the previous highs. So no clear trend. The weekly has produced a swing low, which is bullish. And the monthly is still within a downtrend, which is bearish. We just haven't broken the low of that, but we finished last month with a very bearish close. So there are mixed signals across the board there. And so watching it on a daily basis, if I do see price come down and break the lows here, that is definitely an indication of increased volatility at that point. Then look at the Nikkei, for example, looking actually quite nice and bullish, but it is coming into resistance. In isolation, the monthly looks good. Daily's in an uptrend, a little bit overextended, potentially producing a swing high here, maybe to come back to these previous highs to find support and carry on. And the weekly looking fine. It doesn't look that bad, other than it's approaching a level of potential resistance. Not giving away much there, but also not looking super bullish. Then finishing off with the ASICs, this has got a level of resistance. It is bumping its head up against. I actually highlighted it on the daily, waiting here to see if there's ultimately going to be a bullish breakout pattern. So now there's a bullish sort of triangle where price is potentially looking to break out. So I'll be looking for bullish candles this week and another run at this level to see if there's a case for that. The monthly, of course, having shown that bearishness in the past, and the weekly needs to get past this level. So when I take a look at this one, I've actually equally prepared for price to, it is range bound initially, but it is producing, it's flowing to the upside, so to speak. If I do see price suddenly break to the downside, fail to get through that, then again, I can clump it with all the non-US ones, because they are looking, they're not looking as bullish as the US markets. And within the US markets, I'll be looking at the NASDAQ is really going to be my guide as to whether the market is still very, very bullish, or potentially starting to wanting to take a bit of a breather on, say, the weekly time frame. So again, just that bit of cautiousness as we approach all-time highs, but mainly because I'm not seeing correlation between all the indices, global indices. I'm seeing mainly a split between non-US and US, and that's just explaining why I'm that much more bullish and what I'm looking for this week. There are still potential bull runs to the upside, and they will become relatively evident throughout the days for the day traders. It's just having a look at it here on the daily basis, showing that there's that kind of just a little bit, just a little bit more caution in terms of my risk management, and just highlighting that the markets are not looking bulletproof at this point in time.